Good morning, traders and investors. It is Monday, August 4th. It is a holiday in Canada, a civic holiday. TSX is closed, but the U.S. market should keep on ticking. Anyways, hopefully everybody had a great weekend. At the end of this video, I show a pretty cool adventure through a silver mine that was abandoned in the 60s. It is creepy and very cool. I did with my son. Anyways, let's jump into the charts here. Take a look at the markets. We have pretty much all the indices are trading higher, up about the same from, about half to 0.7%. So it's pretty level field. It's not one group of stocks really leading the other at this point. So it kind of looks like a broad market move. We did have a big sell-off there on Friday, or more or less Thursday and Friday. We saw a good little bout of selling. The market pushed to a nominal new high. It ended up getting into some selling, which is what we talked about, I think, on Friday morning or Thursday morning. We talked about how we're looking for a bigger correction in this market. And really, we've saw that already. When we talked about this about a week and a half ago, 2 weeks ago, we said, okay, everything is pointing to the VIX and the put-call ratio and just our sentiment indicators showing that we should start to see the market roll over. This here is the broad market. This is the way I look at the broad market. This is the equal-weighted S&P 500, the Russell 2000, and the microcap stocks. So this is the majority of what people's portfolios generally look like, or the majority of stocks. This is the group of them. You can see they have been selling off for a week already since we talked about the overall market should start selling off. Now, the S&P 500 and NASDAQ kept pushing to new all-time highs, yet really the market behind the scenes, if you get rid of the big mega caps, we've already seen the market sell off and roll over quite a bit. It was down about 6%. Most portfolios probably felt this pain, even though the NASDAQ and S&P 500 were pushing to new all-time highs. Most portfolios were actually getting beat up pretty good. And so that's kind of where we're at. Now, if we go and look at the S&P 500, we are probably dipping into a little bit of an oversold territory. We have lime green saying the market dropped way too fast, too quickly in this uptrend. So we're probably going to see some type of bounce, which we're already starting to see that bounce today. And we could see this work itself out. Again, we're in a phase here based on the NASDAQ where we had our trend reversal. We hit our 3 targets. We've closed it out at 15%. Now this is where the market generally becomes more volatile, and we could go into a multi-week, multi-month pullback potentially. S&P 500, same thing. If we look at this chart, we hit a target, 2 targets. We got out some last week, and now we're getting into that volatility, and that's typically what happens when these indices reach these specific targets. If we look at the sentiment chart here over on the right, you can see this deep red. We definitely have some change going on behind the scenes. There's some big money flowing out of the market. People are blood in the streets is why I have them kind of red. Red is negative. It means people are fearful. They're dumping shares. This doesn't mean the trend has changed. This just means there is a ton of fear and a ton of dumping distribution going on. And it is definitely a red sign. It's definitely putting some problems into this uptrend, getting us closer to a trend exit signal. So instead of a potential, we are still long. We're mostly in cash, but we're still long the SPY with a very small position left, just letting it continue to run. We could have the trend change red this week and kick us out, or it might want to correct down a bit further and potentially trigger out our protective stop that we have moved up. So we'll just have to see how that goes. Either way, I'm ready for a market correction. We've made our money on the way up. Our accounts have pushed to new all-time highs again. And now we just want to reset and for a new trade opportunity, a fresh trade going forward. Let's take a look over at the rest of the markets here. So we had some people wanted to touch on, let's take a look over at Bitcoin. I didn't touch on that in our last video. Bitcoin definitely flushed down with the markets. That's typically what happens. Now, this is usually, I say flush down because a lot of times it can be a flush down, meaning you have one of these drops. The market has a somewhat controlled pullback, and then it has a big drop in fear. This was another flush down. A lot of times you get these flushes where people bail out and they freak out and they get out just before the market kind of turns and reverses. And this could be that similar. It was in this very tight pattern, very clear support levels through here were broken. That's what the market likes to do. If it sees a ton of people with stop orders and orders placed there, it's going to go down there and try and get you out. and then reverse and go the other direction. This happens all the time, both with bull flags and bear flags. And so we have seen on our sentiment chart with these red bars over here on the right, we have seen there is potentially a change taking place. But at this point, the overall market trend hasn't changed. And if the stock market trend changes and goes down, you definitely don't want to be holding Bitcoin. It pretty still much moves with the NASDAQ and with the market as a whole. So if the market's going down, you really don't want to hold Bitcoin. Ever since it became a future traded, stuck in the financial markets, now it is stuck with the money flows of the rising and falling tide of the stock market to some great extent. Let's take a look at a couple other metals. Some of you want to look at platinum and palladium, and we'll look at copper. More or less, we talked about how it had this running correction. We went through this in great detail in our mentoring session. I think I talked about it even in a morning video. More or less, it's running and having this volatile correction to the upside. Instead of running up and then flagging, building a bull flag before going higher, it's correcting and shaking the heck out of people on the way up, and it's correcting and cleansing it as it goes up. And it usually ends very abruptly. As I talked about, it is a coin toss. It can have an explosive move to the upside followed by a huge sell-off, or it will just break down and collapse. And in this case, it just broke down and collapsed. Again, I say don't get involved with something with this pattern unless you just want to throw money away and gamble and you don't really care about making money, because that's what these plays do. They are just dangerous. It's a coin toss. That's not why we're in the markets in general. We're here to make money, not flip a coin to try and hit a home run. That has a very low probability of working. If we look at palladium, very similar type of price action. It was really volatile, had some big reversal candles. We saw some big selling going on. And more or less, we've seen the market have this sharp pullback. It had a little bear flag and broke down, and this could very easily break down and continue to unwind. But this is big volatility. Let's just zoom back on the charts here. Again, we talked about how this has put in potentially a very nice basing formation through here. It has put in a multi-year base. It has broken these highs. It's broken even this high here. So the momentum has gone from down to sideways. So a stage 4, stage 1, and now I would say it's trying to form a stage 2. Now, this is going to correct. It could build a launch pad and a base through here. It could last a very long time still. But it is showing signs that it's gone from down sideways to now it is going to probably start to hold its ground and potentially have some higher pricing here going forward. But definitely, again, when we get into these highs where we break these previous highs and all of these other ones here in this resistance, that's usually a spot where sellers are going to come in and it's going to have a pullback and correction from that point. The last but not least was copper. We touched on this last week. Copper, let's just zoom way out here. If we look at the big picture, if this will load, you can see here, obviously we've got this upper channel here through price. We have these kind of other ones through here, more significant kind of levels, not very straight there, but you can see how we're up into this resistance zone, had this blow off move. And usually whenever we get to this upper range, we see a multi-year and a huge pullback in price. And of course, we blew right through that. And of course, that was news driven. That was tariff talk. That was all kinds of stuff really creating a huge move. And so when something hits resistance and then blows through it, especially on news, it is a huge red flag. And unfortunately, when something hits new highs and gets coverage in the media, that's when everybody seems to want to buy it. And of course, most people pick it up and get involved in either copper or copper miners. And then, of course, the bottom falls out and the news wipes everything out. The market has a great way of attracting everyone like a bug zapper light, gets them to it and then zaps them and the market resets again. So we've talked about all this and we avoid this type of trading. There's a ton of people that naturally gravitate to this and a ton of newsletters that focus on all the fast moving stuff. But really, in reality, I've done this for 26 years running a newsletter, and it is a losing strategy in the long run. And it sounds good and it makes you want to do it. But the reality is it's just painful and it's not the way to grow your wealth. It's really swinging for the fences and playing with high risk plays. So if you do mess with this type of stuff, make sure they're really small positions. It's more so fun. It is a coin toss. You're just gambling, really gambling with these, versus what we do where we focus on the overall trends and tides and waves and sentiment flows. That puts us as the house and puts the odds on our side when we flip over to strategies like this. Very, very simple in terms of when to own, when not to own, and what we should be moving to as the market moves through the market, different waves and things like that. Last but not least, let's take a look. We had somebody talk about PBW. They said they got into PBW and they didn't realize how much volatility was here. They got in, I think, right up here, and it's pulled back 11%, and they were shocked with how much damage it did to their account. Again, we didn't have a trade specific in this. This is somebody taking a discretionary trade because it's at near the top of our hot list. Overall, didn't have a trigger since back over here. The way our hot list works is if we have a trigger, then you would get in the next day, and you can see where that price moves. Actually, the next day would be right here. So it had a very nice move from the hot list trigger, and since then it's kind of rolled over. It's lost this trigger and it's pulled back. Now the person was asking, they didn't realize this could pull back 11% in a few days. And they want to know how to identify. How do they know how much volatility is in here? Well, it really is pretty straightforward. If you just go back in time and just look at what it has done in the past. Look at this last rally and sell-off. It fell 15% in 4 days. The last sell-off over here, it fell 20% in about 2 weeks. Over here, it fell 25% in about 2 weeks or so. Over here, it fell 11%. It rallied 24% here. It rallied 41% here. If it can move 41% in a month, it can drop probably 80% in a week if it really wanted to. So that's all you have. This pullback here is actually a small one. This is normal for this play. And if something's gone up 24% in a month or so, it can give back that 24% like that. So just look at past moves to see what percentage moves it swings. You can even throw an indicator on here, the average true range. There's all kinds of indicators, and you say go back 20 days or 1 month, or it'll tell you what percentage or how many points that it moves on average, and it'll tell you how much wiggle room you need to give it. So that is very important. And this is a common problem. People get into a trade and then they take they have a normal pullback for that type of asset class. This is perfectly normal. In fact, this is a relatively small pullback. And they think it's like earth-shattering and way bigger, and they got screwed and they took a huge loss. And it really comes down to you have to put a little common sense, a little thinking. You have to put some risk management into this. Jumping into a trade and not knowing the volatility means that you don't actually have a plan, and that is a losing strategy. You need to know, it could pull back 15 to 20%, or in a rising trend, it could pull back 10 to 15% within an uptrend. In a downtrend, it'll naturally always want to fall more, and the bounces will be small. In an uptrend, the rallies are big and the pullbacks are smaller. So you have to understand the environment. It's a falling environment, rising environment. That's what we focus on with even our long-term trend analysis charts here. We can identify, like after COVID, when we're in a rising market, when we are in a falling market, and knowing when to be a long-term investor or short-term investor. We had a hiccup here. We're back into a rising environment at the moment. You need to understand this stuff and the volatility and risk, and that's what I teach in my book, Technical Trading Mastery. Figure out how much risk each position has, and then you can adjust your position sizing so it doesn't shatter and cause any issues. Anyways, take a look at the mine video I did with my son, and we had a blast checking it out. So today we're cruising to a silver mine coming into the bay here. This is from 1960s. There's actually tailings coming out into a lot of places. There's mines back here. We've got the lights. We're going into a silver mine, and we got to hike up and pull out some silver nuggets here at the Lost Lake Lodge. We're going to go around the corner to the far side. Just go forward. Men thinking reverse is better than forward.
All right, Now we're hiking up this super steep cliff up into the silver mines.
Here he goes into the unknown. The silver mine. There are bears in here, bear caves. And he's gone. Okay, we found the mine.
Oh, crap.
I can hear the echo from here.
Tight. I just saw all the mud in my shoe. Oh, crap. It's soaked in here. Yeah.
Hello. Hello.
Darkness.
Wow, look at it, goes way back in there.
Ooh, it's cold.
Let me see. Can I have a flashlight?
Yeah. Well, you guys have
If you
one.
go too far, we're gonna
Let's
be
see,
muddy. If we go too far,
it is really wet. It's all.
It's all soaked in here. All the way.
I want to see this guy.
It sucks. I saw my boots soaked.
Oh, there's stalagmites up there.
Stay with me.
Oh, wow. That's so cool.
Go. Look at the bear paws. It's joking.
Well, you might find a bat in here, so don't get freaked out. The bat can fly by us. Hold on to me, bud. Hold on my shoulder.
Holy crap. Oh, my God. Oh, my God.
What?
Don't even look up there.
Oh, it's a big spider.
Oh, my God. There's like 4 of them. Oh, my God. Oh, my God. Oh, my
Keep your
God.
legs around me.
Yeah, it's a little spider.
Can you see the wire? There's a wire that runs all the way through
Oh, shoot.
for the dynamite.
Oh, it's so cool.
How-
That
Wow.
video.
I am.
Look up. Look up the branches.
Holy, look at this. There's an old beam holding
Look,
across.
there's all the beams.
Oh, look at all the beams.
Yeah. Look down there too. I want to videotape everything for Mom. This is so cool. I'm never gonna see this again.
It's an axle from an old dolly cart. This is where they could turn stuff around, equipment.
That would be something you would not want to be on.
Hold it away from me. I feel blind without a flashlight.
Oh wait, I forgot. I have a long treacherous long back. What the heck is that?
Newspaper.
Oh my god!
Oh,
Oh,
cool.
this is so cool. You guys gotta get over here. There's what is it called? Like ladders and like stairs and
Here's your shaft to send stuff
there's
up
a
and
mine
down.
shaft. Mine shaft.
That is so cool, that mine shaft. Whoop. Listen to it. Let's go ahead and listen. Okay,
Oh, man, it's scary.
hold your breath, listen. Imagine we're looking and we just see something turn its head and look at us.
Yeah, let's get over here.
This is where horror movies are made.
Stop.
Home sweet home. The entrance.
My boot was soaked. Well, actually, it's not. It's delayed for a second. It doesn't get soaked, but you know what I mean. And where are your grams?
Whoa, that's deep.
No.